joined today by Keith Coughlan, Executive Chairman of European Metals. Keith, thanks for your time.
No problem at all, David. Thank you.
How significant is the €360 million grant from the Czech Government to the development of this project?
Well, it's massive, massively important. It's a massive development for us, for the project in so many ways.
You've used the word transformational. Why is this grant and the application so transformational?
Well, I think there's a number of reasons. I mean, clearly it's a lot of money, and to put it in the context of how much money it is. So 360 million euros, European Metals owns a half of the project. So from a European Metals point of view, our share, if you like, of that grant is the equivalent to 6.5 times our market capitalisation at yesterday's closing price. So the stock has obviously reacted positively today, but it's probably still 3 to 3.5 times our current market capitalisation. That's just from a monetary sense. Now, obviously, we don't get that money, but it's money that we don't have to find from traditional sources to maintain our 49% interest in the project. So, very important from a financial point of view. But even more important than that, I think, is the demonstration of the depth of the commitment from the EU and from the Czech government to support Cinovec and take it forward with us into production. That level of commitment is very significant. It's one of the largest grants we've seen of its nature anywhere. And it sends messages to the rest of the European financing community, who are all obviously in contact with each other, but it also sends messages to the global lithium industry and the global mining industry in general.
And how does this grant build on the previous grants, the previous designations that this project has received?
So we've seen, if you like, an increasing level of support. We saw the first grant that the project received from the Just Transition Fund of $36 million. We saw the project be designated a strategic deposit in the eyes of the Czech government, and we saw the project be designated as a strategic project under the Critical Raw Materials Act. And all of those are very important stages. And one of the tenets of the Critical Raw Materials Act when it was first announced was access to further capital. So now that we've seen access to further capital and significant capital, it shows that the level of commitment is increasing within the EU and the Czech government. And it means that the support for the project, I believe, is just going to continue to increase.
Talking about future support, the project is clearly getting more and more de-risked. How important is that for investors and potential project finance partners?
I think it's everything. I think it's fair to say that the global mining industry and therefore the global mining investment industry has had some skepticism about mining projects in Europe because of recent history over the last few decades. And Europe has now done a very good job of starting to turn around that perception. So I think it's a major de-risking development, both from the point of view of investors, of our shareholders who have been waiting patiently, but also of the industry in general. And I think that's vital.
And what message does this send to the industry, the European battery and the EV supply sector? It's clearly a big message, and how do you think it'll be received?
So I think that the message that's sent is that the EU and the regions, Czech obviously in our case, are completely serious about developing this industry, that the whole electromobility thematic, batteries and obviously the critical raw materials that are required to fuel those batteries. And I think it'll be received very, very positively.
And can you explain how the grant will be drawn down and allocated into the financing structure of the project development?
Sure. So we made the initial application under this grant scheme right at the start of this calendar year. So we've been on this for some considerable time. And as you can imagine, for a grant of this sort of quantum, it's very, very detailed application process. So we've had to detail everything that we saw as being qualifying expenditure. And then as we spend money on that qualified expenditure, then there's a process of submitting the claims, having them audited, and then having the money reimbursed. So the project does have to fund those developments and then be reimbursed, but obviously that in itself can be funded, but it could also be a progressive nature, so you don't have to raise all of the money yourself.
We are seeing in the broader lithium market an uptick in interest, both at an offtake, pricing, M&A level. There's a lot starting to happen in this space. How do you think this news fits into the broader lithium market?
I think it's perfect timing, but I think that the uptick in the lithium industry has probably helped in getting the grant secured. It's much easier to approve these sorts of things when you see positiveness in the macro. But I think that the project's going to mature at almost exactly the right time from the point of view of the macro for lithium.
It also appears that we're seeing a sharpening, I suppose, of the focus of the European market in lithium and the lithium supply chain domestically. Yeah. Where do you think that renewed focus is coming from?
Well, I think that if we wind the clock back a little to the first mention of the EU putting in place Critical Raw Materials Act, and it was in reaction to the American IRA. So there was an aspirational statement made, which had a lot of parts to it, but then it's taken a considerable period of time for the EU and its associated groups to research that and understand how you can turn those aspirational statements into reality. And the CRMA was a portion of that. There was a lot of submissions into the CRMA for projects to be recognised, and it's a process of coming down to what the key projects are going to be, and then those key projects getting the support that they require to get into production. So happily, the profile of Cinovec puts us front and centre with regards to that, being by far the largest hard rock lithium resource in Europe, particularly now, given that Rio's Jadar project has been mothballed, and that possibly had an effect on the EU's focus. But they need to choose the most likely projects in each metal, in each commodity, support them and ensure everything can be done to get those projects into production.
How important is CHES to the forward momentum we're seeing for this project?
They're vital. They are, for us, the ideal partner. They have now been in the project for five and a half years, and they've been nothing but fantastic partners for us. And clearly, they've been doing business very successfully in the Czech Republic and the region for 30 odd years. They know the ins and outs of a whole bunch of processes that we as an Australian company don't have intimate knowledge of. They have significant resources. They employ 35,000 people. I think their market capitalisation is about 28 billion euros. And they are 70% owned by the Czech government. So they're a fantastic partner for us.
How should the market interpret this news, and in particular the confidence in the project and the planned delivery of this project?
Well, my own personal opinion, and obviously nothing formal, but I would go as far as to say that this development ensures that Cinovec is going into production.
Where to from here? What's the next item that investors should be looking at to be ticked off?
The DFS, as we flagged, will come out in December, hopefully sooner rather than later in December. But you have to understand now the underpinning of that DFS with this development is very significant. We need to submit our environmental impact assessment by the end of December, and we're on track to do so. And then we're looking forward to receiving final mining permits end of first quarter, early second quarter of next year.
Exciting times ahead. Follow with interest. Keith, thanks for your time.
Thank you, David.